After losing close to $1 trillion in the past weeks for the first time since January 2021, financial experts consider the current crypto crash one of the worst market crashes in history. Because of that, the crypto market has seen a lot of criticism on its philosophy and underlying utility. The street, social media, YouTube channels, and news headlines are full of stories about the great crypto crash and how it's a bubble that will take the market to zero. However, crypto fans and enthusiasts see the current fall of the market as an opportunity to buy more coins at a discount. They still stand boldly strong on a hill of bleeding portfolios, chanting the mantra that crypto is a revolutionary technology that will forever change the way we bank and represent value. Although there is a case to be made for the idea that cryptocurrencies represent a real asset class, supported by cutting-edge technology that has potential to alter how people see money fundamentally. Which version of events is true will ultimately depend on time, but there are several issues that cryptocurrency investors should be mindful of moving ahead. Well, is this the end of the crypto market or the beginning of a brighter future? Let's find out. Major cryptos, Bitcoin and Ethereum, fell by 60% and 25% respectively and are currently trading close to 18-month low. It all started with the Luna Terra scandal, in which investors lost their whole life savings on the Terra coin. Also, the war between Ukraine and Russia later contributed to it, and the Celsius Network's decision to freeze its cryptocurrency transactions worsened things. Whatever the cause, we are sure that the cryptocurrency market is hitting new lows almost daily. This is not only triggering waves of panic amongst investors, but also forcing many cryptocurrency ventures to cease operations. And the main reason for this is because most of these projects lack long-term utility and vision. Currently, there are over 20,000 cryptocurrencies. A new cryptocurrency project is launched almost daily, and the industry is currently flooded with thousands of these projects, despite the market being controlled by 10 leading cryptos. However, most of these projects have a little to no practical use, which is a concern and harms the crypto market. These projects were mostly developed to profit from the crypto boom in the near future, and as a result, they generally struggle to survive a market crash and end up being abandoned. But situations like these are nothing new. We saw the emergence of several enterprises attempting to change the world during the dot-com boom of 1990s. But most of these dot-com ventures of the time lacked utility and a sound business model, just like many crypto schemes. The businesses that made it through the dot-com bubble, and so many of those that didn't, clearly show how a company's success comes down to the fundamental utility and long-term vision. The cryptocurrency sector is no different. Without a doubt, we know that the crypto market is a volatile area. All-time highs and crashes are common occurrences, and they will most likely continue until the sector reaches maturity. However, projects that concentrate on solving actual problems and provide genuine value to investors have the potential to transcend the current market conditions and endure whatever challenges may arise in the future. More than half of the top 100 cryptos by market value have no utility, not having a ready-to-sell product or service. Ethereum, by the way, takes the lead as one that does indeed have utility. In 2015, Ethereum was created as a platform for app development and hosting. Decentralized independent applications are launched on the blockchain thanks to its peer-to-peer network of computers. Also, the network established a fundamental basis of utility by offering smart contracts to the blockchain community. Smart contracts eliminate the need for intermediaries by implementing code that automatically conducts operations when specific criteria are satisfied. When we look at the thriving NFT sector, Ethereum has also proved to be useful cryptocurrency. There are over 80,000 NFT collections based on Ethereum. Apart from Ethereum, we've seen projects like Solana, Polkadot, Aave, Chainlink, and VeChain come up with real utility that involves solving blockchain speed and scalability problems and creating an environment for interoperability among networks or applying blockchain to finance and logistics. VeChain, for example, offers organizations a blockchain-based enterprise solution that helps monitor and manage supply chain activities. Therefore, to help companies streamline their supply chains and guarantee that even the most complex ones function smoothly, the network uses disruptive ledger technology. Also, businesses using blockchain technology can communicate with the rest of the internet using Chainlink. Through Chainlink, smart contracts may be held outside of the Ethereum network. To put it another way, for enterprises to properly utilize blockchain technology, they will require the Chainlink Oracle network. In addition, scalability and interoperability platforms at Layer 0 blockchain networks can connect rapidly with Polkadot without losing their Layer 1 capabilities. After the dot-com bubble, we understood that success of Amazon, Microsoft, and some tech companies shows that if a product or service solves a problem for their customers, they are more likely to continue with it regardless of market conditions. In that regard, the working strategy for new and existing cryptocurrency projects to survive the current market downturn is thus pretty straightforward. Instead of concentrating on making quick money and short-term benefits, more attention has to be paid to real-world challenges and brand creation. Crypto projects that put utility first stand a chance of surviving the market meltdown and becoming the next Microsoft or Amazon. Although the current crisis in the cryptocurrency market seems tough to overcome, on the other side, these market conditions serve as an excellent filter, weeding out projects that weren't useful and robust from the start. Therefore, the industry is left with projects that can thrive when the market stabilizes. The only path ahead for the cryptocurrency market in this regard is to change the emphasis from short-term gain to utility. Guys, thank you so much for tuning in on this episode of On Finance. Make sure you check out all of our social media. Stay up to date with all sorts of financial news updates. I'll see you on the next episode. Thank you.